we've gotten to the point now where all those chains realize they're in deep shit. There's what was exciting to me back then with NFTs was the fact that artists could receive royalties. You could create a textbook NFT. We did a lot of things with NFTs with the Mavericks, with mavscollectibles.com. There's just a ton of applications, but there's got to be utility for them. They can't just be about speculation. And I think when, there's an old saying, everybody's a genius in a bull market. And so when everything was going up, everybody was smart, right? And when everybody's smart, everybody thinks they can do anything and not lose money. And then that obviously changed multiple times, over the past 15, 16 months. And so now, I continue to look for applications, but, it's interesting that, my focus now. So what's really changed over the past 15 months is, we were looking at DeFi. There was the DeFi summer, then there's DeFi, and, but there was really DeFi on just a couple blockchains, right? Mostly Ethereum is where all the action was. And there was a lot of subsidies. It's like people were approaching crypto and DeFi in particular, like they did software applications, where there were, back in the day, VCs would subsidize apps or applications and offer them for free, and knowing that they were losing a boatload of money just to get users to try it. And we saw that with DeFi as well, where, on Aave, wherever you went, there were all kinds of rewards that were just handouts that somebody had to subsidize. And that subsidy was coming from investors. They were coming from, misperceived tokenomics, or they were coming from, just buyers who were just wanted to play the game, trying to earn as much, just trying to go as degen as they can. And, what we've learned since then, you go to Aave now and you see what the real rate should be. And it's all algorithmically driven without the reward. And once you took out the rewards, the whole perception of DeFi changed. And I think that's also one of the reasons why DeFi has kind of survived a little better than CeFi has survived, because CeFi is a centralized business, has tried to run with rewards more and subsidies more, and that catches up to you real quick. One of my favorite sayings is, first there's the innovators, then there's the imitators, then there's the idiots. And what's been happening in crypto over the past 18 months, or actually the past 6 months, I should say, is when something worked on Ethereum, then it went to an L2 of Ethereum. So you saw DeFi go from Ethereum, it's too slow, it's too expensive. So then you go to an L2 of Ethereum. Well, it's cheaper now. That's a good thing, right? Then it went to another chain, and the same, and then another chain and another chain and another chain. Sounds like a song. It sounds like something DJ Khaled would do. And another chain and another chain, But what would happen is, because blockchain for the most part is a zero-sum game, there's not a whole lot of differences. We can argue the trilemma, right, and the nuanced differences among all of them. And Bitcoin maxis will argue a whole different story. But the reality is, if those chains don't get enough volume, they're gone. And because a lot of the competitive aspects of Ethereum competitive chains are cheaper and faster, you've got to get a whole lot of transactions in order to survive. And so what they all did, and they all did the same thing, let's go get DeFi. So they all put together grants and funding and subsidies to go out and get LPs and others that, would support, DeFi on their platform, DeFi on blockchain X, fill in the blank. And then they did the same thing with NFTs. We're going to go get this celebrity and we're going to go subsidize it, and we're going to put it on our chain, and that's how we're going to get enough traffic, and we're going to show off why our chain is better. And then they go through the long list of, blockchain X maxi, things they would say. And what they found out very quickly is that doesn't work. When you're a copycat, even if you have your checklist looks a little bit better, it's really, really hard to get somewhere. And so all that said, but we've gotten to the point now where all those chains realize they're in deep shit. There's just no there. You can't just, and these are multi-billion-dollar cap companies. Now, obviously, the market caps of the companies are convoluted and kind of configured the way you want them based off of your float versus your total allocation or your total mint. But now, what are they going to do? And so you're starting to see some of the fissures in these chains that really don't have any traffic and really don't have anywhere to go. And to me, that's just part of the cleansing that's natural. I've said before that this is a lot like the early days of the internet. And when we went, 95, 94, 95, my company, we started streaming. We were the first company to do, commercial streaming and this and that. And it was a race, because the next thing you know, there are 20 companies, 30 companies, 40 companies trying to do streaming. And, 39 of them died, or 35 of them died. And you saw the same thing. And then when the 2000 and 2001 hit and the bubble burst, 95% of companies were gone. But the ones that were able to survive are still crushing it today, the Amazons, et cetera, Google, et cetera, because they had good, valid business models. And that's what we're going to see right now with crypto. Crypto, has got a lot of things that it can do really, really, really well. But we've seen all the money and brain power really geared towards DeFi and NFTs. And for 99% of those apps, it's a waste of brain power. It's not, what's the difference between, DeFi on blockchain, on Ethereum and Polygon and all the others? Not a lot. If I had to buy one today for a month, I'd probably buy Bitcoin, because there's not that push of applications right now. I mean, I'm trying to invest. If you got one that, is a business application that replaces not just fintech, but let's just say something you do in the office. Here's the way we've been doing it. I use this app all the time, and, it has nothing to do with fintech. It has nothing to do with collectibles. This is just, I'm using smart contracts on Ethereum or whatever blockchain, and it's made my life a lot more efficient and a lot better. When those start to happen, whichever blockchain they're on, bam, right? Then people start saying, oh, I got to use, it's just like, my 13-year-old wants Snapchat. Bam, I got to have Snapchat. Got to have, when I turn 13, I got to have Snapchat, or got to have Instagram or whatever it is, TikTok. What made people download TikTok? Why does every kid use TikTok? It doesn't have to be social media, and I think it'll come from business first, but we need that business application, the decentralized version of QuickBooks, decentralized version of whatever that is a crypto app that is just better. And when that happens, boom. I did this talk at the University of Chicago, and I only, and these are MBA students, and I was like, how many of you have used crypto? And about half had. I'm like, how many of you have used a crypto wallet to buy something? And about half the half did, or core of the people. And I'm like, of those of you who did, wouldn't it be a lot easier if you could just go to an e-commerce site, connect your wallet, buy what you want, click it, sign it, and have a lower transaction fee, and it's just paid like that? And if you were a vendor, wouldn't it be easier to just sell, knowing, because you get that cash immediately? And so you could probably sell for less with less friction. Yeah, of course. But nobody's done that yet. We've looked at it with the Mavs, and, but there's so many, everybody tries to go through traditional means to connect your e-commerce through BitPay or whatever, through a bank, and that just gets